Hey everybody, good morning, good morning. It's about 8:33 in the morning here. It is January 19th, 2024. It's Friday. That means it's, excuse me, it's Lotto Friday. I'm pretty much over the hump here on the little illness that I've had. I'm still a little groggy, but otherwise, I'm doing great. Hope you guys are all doing great as well. I'm going to take a look at Bitcoin and the S&P 500 this morning. We've got options expiring today. We are past our what people call VIX expiration, the volatility index expiration. That typically happens on Wednesdays when those expire. And so here we are. Here we are. It's a new day, and I'm going to go over where I think the market's going to be heading over the next maybe the next week or so. Before I get into all of this, as you all know, it's not financial advice, not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and this is always just my opinion on the market. All right, if you need access to our Discord, you can find all of that information on BitDoctor.org. BitDoctor.org will give you information on how to access indicators, education, trades, our trading room, all of that good stuff. So if you want to join us, more than happy to have you there. So let's take a look at Bitcoin. All right, so on Bitcoin, just a couple things I want to make note of here on the 4-hour time frame. All right, so first off, we have a range that I want to discuss here, and that range is created by this wave right here. So that wave did create a little bit of a range here, and I just want to talk about it just a little bit. I'm not going to go to the candle wick. I want to focus just on the candle body closures because I think that's going to provide a little bit more context. So I'm just going to take this guy straight over to the right, and I'm creating just a little bit of a channel here. And again, I'm focusing just on candle closures for the time being, or at least the major candle closures. So I'm going to pull this out and I'm going to zoom in just a little bit. I want to focus on this channel, and I want to just kind of take a look and see where some of these areas of confluence are. So we can obviously see that we have attempted to grab liquidity, in the upper and the lower of this range, and it has occurred several times. So, what we can see here, we can see that we have a liquidity grab, here and here, and then to the downside, it happened several times, did not close a candle below there. Again, it happened right here as well, did not close a candle below there. And that's going to be roughly around the 40,800 level. I don't know what the significance of 40,800 is, but that seems to be like a pretty important area where we're seeing a decent bit of support. And again, you can also see it right here. And again, it happened right here. So we've had lots of liquidity grabs on the downside. And then, on the upside, I already pointed out these two areas here. We had our third area here. We had a huge liquidity grab there before we had a major drop, right? Which brought us all the way back up to the top and actually took us to, a range to the upside. So that's, our halfway range to the upside. And what I want to do is what I frequently do is take a look at a total range expansion. So I want to get my -1 on here. I don't believe I've got it. So let's put the -1 on this, and what we can see here, that's going to be this orange line up here. And again, let me just change it to yellow so we can see this as a total range expansion to the upside. What ended up happening here when I talk about these things, I always look at geometry. That's one of the number one things I look at when I'm looking at a market. And what I always say, or what I have historically said, is if you can get a clean range break, you're going to expand 100% to the upside. Well, what ended up happening? All right, so the first thing that happened, we had a perfect range expansion to the upside, and then we had this liquidity grab on ETF day that took us all the way up to about 49,000, just shy of 49,000. And since getting there, of course, we rejected, we went down, and as per usual, if you break that range, what's going to happen, you're going to get 100% expansion to the downside, and that is what happened down here. So what is happening next? That's always the question that I get. Well, whenever I do analysis, I take a look at geometry, I take a look at fibs, and I pay real close attention to the indicators. right? The indicators are going to tell us a lot here. So first off, what do we have? We've got, from an Elliott wave perspective, which is really one of the last things I look at, and it should be one of the last things that you look at when you're doing analysis. I'm going to go down to a 1 hour time frame here, right? What we've got, a long range of consolidation here, and then the breakdown. When we get that breakdown, some of the things that we're going to look for, good confluence for buying opportunities, right? What kind of buying opportunities are we going to get on a drop? And, you know, I think a lot of people are really gung-ho on Bitcoin just falling through the floor and going straight to, you know, 10, 12,000. I mean, that's not going to happen that fast. It's not just going to fall through the floor unless we have a significant economic event happening. But we do have signs that there is a little bit of a bottom forming. Okay, so you've got here, you know, the 1 hour, the 3 hour, the 12 hour, you know, the green, the yellow, and the red, all down here in oversold all at the same time, right? And that was about right here. And we did have something similar to that occur back here. This was where we had a major bottom, at least temporarily. But the red wave was still moving down, and the red wave is now oversold, right? So we've got some evidence that we could be seeing a little bit of a bounce in the coming days, but chances are pretty good this bounce is not going to take us back above 49,000. There's reasonable, there's good reason that we're not going to see Bitcoin go back up above 49,000. If it does, great. If I go back to a 4 hour, I do want to point something out here. One of the other reasons why I'm looking to be a buyer in this area. Let me get rid of that. Okay, so we've got a low here, and then we've got a lower low here. Okay, and if we take a look at the indicator, you know, on the green wave, on the 4 hour, we've got a low here, and then we have a little bit of a higher low here. So we do have some bullish divergence that has formed here on the 4 hour time frame. And so that basically is stating, you know, regular bullish divergence is where you have a lower low on the price, but the indicator has failed to create a lower low. Now, it's a little unconfirmed at this time. It would be ideal for this to start to curl up a little bit and start to, you know, see a little bit of an ascent to the upside. But I'm willing to take that calculated risk right here. This is actually almost exactly where I decided to, you know, to make that purchase. What I saw is we had, you know, some resistance right here at 41,324, had a little bit of a rejection. Again, found that floor there at about 41,000, didn't close below 41,000, went back up, found that resistance, but then that last 4 hour candle broke through. So a little bit of a pullback, a retest of that zone right there. You know, we should see a little bit of a continuation to the upside, you know, after seeing a good bounce down here. What will make me feel much better about this is if we get back above the median, where the median is at about 42.5. We get back to 42.5, I'm going to feel a little better about that buy, and if that does happen, and it's an if, it's not a when, it's an if, that does happen on this particular trade, I would say that this is going to confirm that bullish divergence, but I don't think we're out of the woods yet, because we've got time cycles that we're paying attention to, and if we you know, go to a different chart that I've got on here where I am keeping a little bit of an Elliott wave count on this, right? What we were looking at is, you know, the completion of a wave 5 up here, and then what we're looking at is basically, you know, this downward move where we had previous resistance, which is now, you know, again, I already talked about the channel, I'm not going to beat a dead horse, but I would expect that this is still going to continue to be support, at least for a little bit longer. Get that move up, and again, I'm looking for a move up to maybe 45. It could go as high as 46,000. From a Fibonacci standpoint, what I'm seeing from this dominant pivot high to this potential low, again, it's still unconfirmed that this is going to be a good low, but if we take a look, we've got the 50 at 44.6, we have the 618 there at 45,631. Let me go to that, the other chart again. The important part about that 618 or the golden zone is the fact that the 65 is right on the median of that range expansion to the upside. So it is entirely possible that from down here we could see a move up here, and this would go into, this would go maybe even into next week, right? So we could be looking a week into, a week into the future here. Nobody knows what's going to happen. Nobody can guarantee anything. All we can do is take these calculated risks, and there is a great possibility that Bitcoin can see a bounce. Now, certainly it's possible that we could be looking for a triple divergence, in which case we would, from down here, we would see this move up, and then we'd see one more move down before we saw that move up. Very, very possible. What that would basically end up doing is that would be creating a little bit of a falling wedge, and maybe this doesn't go quite as high. We have a scenario like this that could potentially be in the works, creating that, that ending move before we see that move to the upside. That's okay, because we're really not talking about, a significant amount of risk for the potential reward that we could be getting, right? So if you target the 618, it's about 11% profit. And you could put that risk pretty easily, somewhere around here on the other side of 40,000. We're really talking about a 3% risk for an 11% reward. That's almost 3.5 to 1 risk to reward ratio. That's not bad. And then, if this does start to break up and out of here, well, then you just take your risk and you minimize it, right? Then that turns into, much more reasonable trade. But at least, finding that right positioning is always the hardest part. I would absolutely stay away from leverage, because I think at this point it's a little bit reckless, unless you're using reasonable leverage, using low leverage. I see Kiko working on like a 5x trade. Those are reasonable leverage trades where you are able to manage your risk so much better than if you were to take something on high leverage. Cross margin, if you're a cross margin guy, just be careful with that, because on cross margin you tend to use your entire your entire wallet as collateral, and I don't condone it unless you know what you're doing. But on isolated margin trades, 5x, that's great. Even up to 7, 8x, that's fine as well. The only time, in my opinion, that you should be looking at a higher leverage trade. I took like a 40x trade on Cardano late last year, right? And if I take a look at this, I'm going to try and find a chart that I haven't touched here. I want to just point out what a good high quality trade would be if you want to take leverage. So on Cardano, we saw this consolidation, and what we ended up seeing here was, great evidence that we had some serious compression going on, and we were able to trade this so well, right? And A, B, C, D, E. I mean, you could count this and get a nice wedge out of here. At any rate, it was compressing big time, and that is super bullish, right? So you wait until it gets closer to the bottom of this rail. You take that trade, and you're able to place your risk right on the other side. If it breaks down, it breaks down, but if it breaks out, that's huge profit potential. And obviously, I didn't take the trade this far, but I mean, shoot, that could have been an 80% trade with no leverage. But add in a decent amount of leverage, you can really create some exponential gains. But you got to make sure that the trade is set up perfectly for you to be able to do that. And Bitcoin is just not there right now. The only thing Bitcoin has, and again, we've talked about this, so again, I'm not going to just belabor myself discussing the support level that we're on, but seeing that channel that I outlined earlier, we are finding support there. So it's reasonable for you to expect that there's going to be, continued support there for the time being. If it breaks down, if it breaks out of this range, what do I always say? If it breaks a range, what's it going to do? And I'm expecting you guys all to say it with me. We're going to get an expansion. So let's take a look at the expansion, right? Let's put the 1.5 and let's put the 2 on there. Let's see what that looks like. These would be bad. I'm marking these as red because this would be a range expansion to the downside, right? So to the downside, what do we have? Well, we've got our first target, which is the 50% downside, which is going to be at 39,174. The 100% expansion to the downside, which is more than likely where it will go if it breaks down, is going to be at 37,629. So if we get that, right, if this just keeps going down, right, so if it keeps going down here, maybe it's going to find some support there, but then it's going to likely continue moving down until it hits that target right there, which is why it is so important for you to understand what trade you're taking, why you're taking it, and when you're wrong. If it breaks down below this range and we get a closure below this range, I mean, a closure on a 4-hour would be bad, on a daily would be terrible. It would really almost guarantee that we're going to continue expanding to the downside. Again, we're only looking at geometry right now. I don't have any Elliott wave on this at all. I have geometry and I've got fibs, right? And fibs, I'm kind of loosely calling this channel, fibs. We're talking about 50% and 100% expansions, but the geometry is all that I'm really looking at. If we break down, we're likely going to expand because we have a clearly defined range here where we have found price acceptance. I'm not going to put a volume profile on this, but if I did, you would see that there's probably going to be a point of control somewhere here in the middle of this range. And again, if we break down, we're going to go and find the next level of support. And you can just look at the chart and see here, there's resistance, 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 resistance over and over and over right there at the 100% expansion. It's almost guaranteed that if we break down, we're going to hit that level. And that's likely where we're going to find significant support because that was significant resistance over and over and over again. So again, geometry alone is telling us that we should find some support here and we should see a continuation move to the upside with some reasonable upside target somewhere between 44 and 46,000. So if it gets to 44, shoot, raise your stop to, maybe 42.5. Right? If it passes that that range, right? The range expansion, not the range expansion, but the area at the top of the current range that we're in is right there at about 44.2. Breaks up above 44.2, set your target there at about 46. Because if it gets to 46, that is going to be your high probability area where it's likely going to terminate, even though we've got, the expansion to the upside. There's no guarantee it's going to get up there. Like for a really, really, hopefully a clear example, there was no guarantee when we had this expansion right here, there was no guarantee that it was going to continue moving to the upside. It got almost halfway. It got basically right here to where this is, even though this wasn't relevant at the time. It still got to that area and it rejected and it basically went to the downside expansion target, right? So there's no guarantee that we're going to see that continuation move all the way up here to the top of this range. Just take your profit, be happy with what you got, and then look for the next trade. You can always move up your stops. You can always do that. But certainly don't give back everything, right? You're never going to catch the bottom. You're never going to sell the top. And if you do, you got lucky. You're never going to be able to do it on a consistent basis. And if you are, you're the one that's moving the market. So just take a decent part of that swing, be happy, book the profit, withdraw some money, buy dinner, whatever it is, and live to trade another day. That's the goal here. Okay, that's Bitcoin. That was, I've been going for 18 and a half minutes here. That's about 15 minutes longer I wanted to do on Bitcoin, but you get the idea. Again, I want to focus a little bit on kind of educating you guys a little bit. Geometry, fibs, then look at Elliott wave. Right? Elliott wave should be the last thing that you do after you do enough analysis on the price action alone to see what's going on, and then take a look and see how can I lay Elliott wave on top of this to make sense of it all. All right, let's take a look at the S&P 500. So I'm going to take a look at ES, and I've been talking about this again for days, right? I've been talking about this for days, so none of this really should be a surprise to anybody. Right, so we were talking about this, and I said, hey, we are probably going to get up here in this area. Now, is this going to happen today? Maybe. There's a chance that we could see a really good bullish move up here above on SPX, the cash index, above 4,800. It's possible that we get to closer to 4,850. Now, ES right now is at 4,832. And to get up to 4,870, which is where, you can see here, I've got get short here. I'm interested in getting, more heavily short all the way up here in this area, which on ES is going to be about 4,875. This target only simply came from the fact that here on the 4-hour time frame, and you can see it right here, right? And again, geometry alone and fibs. I laid Elliott wave after all of this was completed. We got to move down here to the 618. Some of my favorite trades to take. We got to move to the 618, and we got, our wave master on the 4-hour was saying, hey, this looks pretty good. You should be considering buying. Let's look at what it looked like on the 1-hour. Now, we were buying equity when we were all the way down here. When a lot of people are like, yeah, it's just going to keep going, I was like, yeah, we're going to buy. Why did we buy? Well, we bought because the wave master was saying, hey, we could be creating a bit of a bottom here. Mix that with the 618 pullback, you have a recipe for success. We took 8 equity trades, and the majority of them are doing really, really well. I'm just going to go and poke over at them here really quickly, and let's just take a look at this. So we have Wells Fargo, which in pre-market, it's basically right where we bought it. OKTA, that's up a little bit. Estee Lauder, that's up. Honeywell International, that one's actually doing pretty well. You can see where we entered and where it's currently at. You see Zillow is up, eBay is up. Why did I buy eBay? Shoot, I don't know, because it looked good, right? Emerson Electric, that one looks really good as well. Etsy is gapping up in pre-market. All the trades are doing really, really well. We got into those when everything was basically, from an indicator perspective, saying like, hey, you should probably be looking to buy. So that's exactly what we did. And now that we're here, I'm looking at this from a geometry standpoint. There is a chance that I've got this expanding wedge wrong. There's a very good chance that this is wrong. There's a chance that this is an ABC into an A, ABC into a B. I do believe we're still going to get that move to the downside, but I don't know that this is really like expanding wedge material just quite yet. I really don't have good confirmation on this upside, but from a range expansion, we got the 100% right up there at about 48.84. From the 618 pullback, your highest probability trade, about 70-80% of the time, is going to be a move to the 236, and that's going to be, again, at about 48.70. So once it gets up here, we're getting to an area where, we're really extended. We're really overextended at that point. So you need to be working on managing your risk once we do get up here. I'll probably be closing equity. I'll probably be, taking profit, moving stuff to cash, and I'll just be getting into some not aggressive but reasonable short positions on the S&P 500. Not necessarily on Bitcoin, but on the S&P 500. And I'm talking reasonable because I don't have evidence right now that we get up here and we immediately reject. That might not happen. It could be that we've got a 1, 2, 3, 4, 5 ABC, and we're going for wave 3. If that's the case, right? So let's just say and pretend for a moment that this ABC is all the correction that we are going to get. And this is not an ABC, but this is a 1, 2. If that's a 1, 2, our upside target is all the way up here at about 49.75, which is going to be about 4,900 plus on the SPX cash index. Now, think about that for a moment. If that happens, well, crypto is going to continue to do well. Again, I'm looking crypto bullish maybe for a week, and getting us up there to that 46,000. Keep an eye on the dollar index. Keep an eye on your indicators, right? On the hourly, you can see we're a little bit overbought right now. The red wave, which is the 12-hour, and it is roughly a 12-hour because ES futures is almost a 24/7 market. Not like crypto, but during the week, it only closes for like an hour 15 minutes. In the afternoon, the evening, right? So I'm willing to call this the 12-hour. It is curling up. It looks okay. Again, we could be seeing this as a 1, 2, and then working on a 3, 4, 5. So we might be working on a little bit of a wave 4 and then going up for wave 5. A lot of people are going to say, yeah, here we are. We're at a double top, right? We had a top here. We have a top here. Reasonably, we could say, yeah, we're probably going to fail here. But I tend to believe that we're probably going to do a little bit of a pullback, and I think we're going to continue moving to the upside probably into the end of the day. So we're just going to have to kind of see how the market goes today. But again, this is where I think that the S&P 500 is likely going to go. And once it does get up here, I am going to be expecting, and I believe that I'm reasonable to expect that this is more than likely going to see a rejection in this area, and we see a move down. Now, where's that move down going to go? I'm not going to make that projection just quite yet. You can see I've got my E all the way over here. If it is a broadening wedge, your range target is going to be all the way down like 4,600, right? But it's way too early to say that. And I only say that as a disclaimer because I don't want to say we're going to 4,600, then all you guys are going to get 460 puts on SPY, and then you're going to be mad when we don't get there. Like, I'm not saying that we're going to get there. I'm not saying that we're going to get there fast or anything along those lines. All I'm saying is if this is an expanding wedge, likely we are going to see that move down to around 4,600, but it could take weeks to get there, right? I mean, how long has it taken to get from this low here to where we're at right now? That's been 2 weeks that we've been working on this grinding move to the upside. And if this just continues going into next week, right, wait until we get up there and then look at the indicators and then look at geometry, look at the price action, and then see if you can throw Elliott wave on there and figure out where it is that we're going to go. Don't try and predict into the future more than you're really able to, right? Because as you can see, even back here, when I was looking at this as a wedge, I was looking at the geometry and I was putting, the Elliott wave ABCDE on this. Yeah, certainly we did get a little bit of a pullback and we did move to the upside, but we didn't get down to where an E would go. It's still valid. That E to be up there is still valid. But look at the geometry, look at your indicators, look at the price action before you rely too much on Elliott wave. I guess that's really the only disclaimer that I would put out there. All right. So we talked about Bitcoin. We talked about the S&P 500. Those are the things that I really wanted to hit on. It is now 9 o'clock in the morning. I'm going to go and get myself prepped for the day, to see where the market's going to be taking us. And, if you want to have access to our Discord, you can find all that information on BitDoctor.org. Trade ideas, equity, options, crypto, day trading, all of that good stuff. You can find all of that inside of our Discord. You can get access on BitDoctor.org. And always, if you have any questions at all, pop into the free community on Discord. Ask questions. Post some trade setups. I'm more than happy to take a look at those and provide whatever guidance or advice that I might be able to give there, or maybe if you need a little bit of some affirmations, whatever that might be, just pop in there. More than happy to have you there. And of course, last but not least, wherever you are in the world, I hope you're having a good day, good night, and a great evening. Take care.